for people like John Vance with Vance Wealth Group with us today. And this is an important topic. Steve's going to tee him up a little bit. Did you realize that there is one section of the fiscal whiff that if it went through, if you had, not all of us do, but just give you some numbers, if something didn't, a portion of it didn't get extended or assisted, if you had a wealth of an estate of $5 million plus, let's just say you had an estate of $5 million, if the rules changed, your estate to your heirs would change by $2.2 million. Mm-hmm. What are we talking about, Steve?
Well, in the financial, in a fiscal whiff, what we're talking about, in fact, we just touched base on the Debt Relief Act, so that was a big one. But over lunch, John was updating us on the estate tax situation. John, can you touch base on that? It's such a big issue.
This is huge.
Yeah, great
news.
Of
course. And one of the things, just in full disclosure, I am a certified financial planner, but one of the things to always realize is you want to seek the proper legal advice as well as your tax professional for more specifics on some of these details. But in terms of what's been passed, and the details keep rolling out, but what we've seen now, which looks like it's going to be going, which is going to be official, is that we have this past year, we had what they called, there's an estate tax exemption and a gift tax exemption. And so just to clarify that, the estate tax exemption is essentially what's used at your death. So when you leave your assets to your heirs, that's used upon your passing.
Something I hope I don't have to worry about for a long time.
Well, your heirs will worry about that, right? So, and then you have the gift tax exemption. Now that is actually, the gift taxes can be, the gift exemption can be used during your lifetime. And so what's really cool about last year is they unified them, which means you could use it during your life or you could use it at death. It would be used on your behalf. And so the great thing about that is that it allowed for advanced planning. You could give money to your children, to your beneficiaries. You could actually do some really phenomenal planning ahead of time. Well, with the fiscal cliff coming up, that was going to go away. And then it really forced people, I think in December of this past year, to make decisions hastily because they were worried about this option going away. Well, the great news is that's the gift and estate tax exclusion is now is permanent. It's going to be $5 million, and the tax rate above $5 million is going to be at 40%. And so last year it was at 35. It was set to go to 55, and so they came to an agreement. It's going to be at 40%. So, like you mentioned, we were talking on a $5 million estate. That's over a $2 million potential tax liability that has been avoided. And the great news, again, it's permanent. So Congress can always vote to change it later, but we're going to have both parties coming together to make the change. And now it stands as what's going to be the law of the land here for a little while.
And the better news is it gives financial planners the ability to get their clients together and look at the future now. And make some great decisions on how to spend their estate to benefit not only themselves now while they're living, but their predecessors and their children.
Well, that's right. And one of the things that was really hard, especially living in California, it's really expensive to live here, and they were going to have the estate exemption at $1 million. Well, if you start incentivizing people with $1 million or $2 million to giving money away ahead, early, that's not enough money to live off of. I mean, I'm just using simple math. If you're spending 3% of your money and you have $1 million, that's $30,000 a year. So when you're talking about $1 million of assets and that became the wealthy number, that provided some real challenging issues because my clients didn't want to have to pay the estate tax, but they also weren't in a financial position to be aggressive with giving. And so now with this number up at $5 million, it really does allow for sound planning. And now there's not that scared mentality of, okay, I got to do it today because
it might disappear
because it may disappear, and then my children are going to get hit with this big tax.
Talk about sound advice. Sound advice from John Vance of Vance Wealth Group, located right here in Valencia and also in Pasadena. John's the owner of the Vance Wealth Group, a great team of financial professionals. He's helping clients just like us guide you to personal and financial wellness. And how's the best way to get a hold of you, John?
Well, the best way, my toll-free number is 888-775-0950, or you can visit vancewealth.com, V-A-N-C-E wealth.com.
Very cool. If they can't spell wealth, oh well.
Yeah, that's right.
So, yeah, we're really pleased to have you on. That was great information, without a doubt. And you were talking about, the differences of, $1 million versus $5 million is a big deal. And I was joking before the break about, and I'm not picking on Obama. This is just a fact where they're trying to categorize people, and they're categorizing millionaires with billionaires, and that's like categorizing, me with the millionaires. is the difference between a millionaire and billionaire. Do you have an idea what the difference is? I think you'll get a kick out of this. I did. If you are making $250,000, which I think all of us will agree is pretty good, and you're in the top 1% in the nation in income, I think, at 250, right around 268, I think it is, or something like that. Top
Sounds
1%
right.
in the nation. So not everybody makes those big numbers. So if you're making $250,000 a year, did not have any expenses at all, how long would it take, Stevie?
I give in. How much?
It would take you 4,000 years to become a billionaire.
Wow.
At $250,000 a year with no expenses.
Wow.
And no taxes.
And no taxes, right. That's just like, here you go. Here's $250,000 all to you, and you still couldn't become a billionaire in quite a few lifetimes.
That's right.
So good information. Thanks for sharing that, because that's really important. Speaking of important, I thought it was unique when I was reading through John Vance's information, and not that he's, it's great that he's a local here. I love that. He's accountable to your community right here, just as we are. And he's accountable to our professional resource group and now the Don and Gino Real Estate and Finance Show, is that he is taking on a unique direction and helping some people, I think, that need his advice better than anyone. And you're helping women, or really anyone that's either divorced or recently widowed, with their finances and help them figure out, what the heck do I do now? Am I right?
That's right, and it is primarily women that we assist with, and one of the main reasons we enjoy working with them, because they value a trusted professional, and so they're just
us guys know everything, right?
That's right. So, and we help them through really tough times. And when you go through a death of a spouse or going through a divorce process, there's a lot of emotional issues around that, and we can't solve the emotional issues, but hopefully through our sound planning and advice, it makes it a little bit easier on them.
I think that's brilliant, though, because I know plenty, just when we're doing refinances or purchases, or unfortunately, when a couple are having to sell due to divorce, there are so many pieces of the pie, and usually, unfortunately, I'm not stereotyping, but it is fact, usually the women's going, now what do I do? My husband handled all the finances. What do I do now? And you're helping people with that, because you're giving them sound advice, and not just with how to handle it, but also how to handle the assets and everything that's involved in it. Am I right?
Well, it's just having a clear understanding, and it really depends on their stage. If they're in the middle of a divorce, it's really wrapping their arms around what's theirs, what are they entitled to, what are their rights, and then helping them put together a plan that's going to work for them, for their family going forward. And then if they already have gone through that process and they've gone through the divorces, then helping them prepare for the next stage in life. That may be retirement, and who knows? It's really, everyone's unique there, but it's really giving people the confidence so that they can kind of be empowered with what they can do next. And the empowerment feature is really nice, because you don't want to feel helpless. And so that's what our planning helps people do, is to create a road map in terms of where they're headed, and that's really what a comprehensive financial plan will do.
See, if you're wondering where this very astute individual is John Vance with Vance Wealth Group right here in Valencia. You can reach out to us. We'll make sure we get a hold of him for you at 855-DON-GINO. That's 855-DON-GINO, or donandgino@gmail.com. And send us questions. Send us questions for John. Send us, what questions we can ask him, what questions you want us to research. We always want to hear from you. John's going to stick around with us. He's going to share some financial tips to help you start off your year in 2013 regarding investments and debt, which is always in our head after the holidays, unfortunately. When we come back to the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220, KHTS.